Hello everyone, welcome back to our ERP session. In this session, we'll be talking about the finance module. What is finance? Finance or accounts department is a core department of any organization which is responsible for arranging the funds or credit to run the business operations in a smooth and satisfaction way. They are responsible for acquiring the funds or managing the funds and managing the expenses to run the organization so that any organization should not run out of the cash at any point of time. So this is finance department in a company, and they are mainly responsible for all the financial or money related activities. So now how they will perform the duties in ERP, let's see that. First thing is any finance department will set up the ledgers in the ERP. What are these ledgers? So any financial activities going on, which are nothing but the transactions, are recorded in the accounts. And those accounts are called as ledgers or ledger accounts. Like what? For example, you're having an asset, the company has an assets. So now all the things related to assets, like they have been purchased, will be recorded under assets. That is nothing but asset ledgers. Our company has an inventory that is required for selling it. So all the inventory related activities are recorded under that inventory ledgers. And so a company needs to pay to the employees salaries. So all the salary related activities are recorded under that salaries ledgers. And similarly, and so on. Now, what is bookkeeping? Bookkeeping is nothing but recording an income or expense for a company. Like there will be many expenses when you're running a company, there will be many expenses incurred by the company, and there will be many incomes that needs to be recorded. Expenses are nothing but salaries or bills which are like electricity bills, rents, or any other bills. Income is nothing but the main operation of the business by selling or providing services that to which income is generated. So this is nothing but the bookkeeping which every accountant usually use. Now manage cash flow and liquidity. The core part of finance department is to manage the proper cash flow, how the cash will flow and how it will be managed so that the company never runs out of the cash of liquidity and the operations are carried out in an easy way. Capital management. Here is similar to cash flow also, but the main things will be like they will be recording all of their capital expenditures or capital recoveries, which is nothing but account payable or receivables or salaries or loans or accruals. Now, what are those? Account payables are nothing but we buy something from a vendor, but we didn't pay it. So those will be recorded under accounts pay. Account receivables are nothing but we sold to a client or a customer, but we didn't receive the money. That is under account receivable. And accruals are nothing but like, for example, an employee has been entitled to a leave for every year. So a company, what it will do, it will deduct part of amount from its income and keep it in a separate account. And when an employee is entitled to go for a leave, it will pay from that account. Like an employee is entitled for a 2000 real per ticket per year. So now every month they will like accrue like 163 real or 165 real, and they'll keep it in a separate account. So once 1 year is finished, an employee wants to go for a leave. Now that accrual amount will be used to pay that ticket amount to that employee. Similarly, salaries of employees and loans. Now the bank management. Bank manager company can have multiple accounts, and they are responsible for seeing that how much fund is available in the bank to pay to the vendor, or how much money has been received from the supply from the customers or from the clients, and which bank accounts will be used to pay to the vendors or to the salaries or any of the expenses covered by the company. So in this way, the bank management will be taken care by the finance department. In fact, if one bank account does not have any efficient funds, they will use the transfer mode, transfer from one bank to other banks. Now, cost control methodologies. Every finance department should take care of the cost control methodologies, like reducing the expenses, reducing the employees if not required in any department, and many more methodologies should be taken care, which is responsible by the finance department. So they will be responsible for carrying out the cost control methodologies to run the business and make sure the cash flow is going smoothly or the cash is available at any point of time to carry out the business in an efficient manner. Preventing fraud. Now, in preventing fraud is nothing but all the financial activities, though carried out by finance module, there are chances that if they have been given authorization to other departments, so the frauds are occurred. And in fact, in the finance department can also be the fraud occur, like if financial person is not good. But as the money related activities are not involved in other departments, like procurement department is responsible for purchasing only, and sales department is responsible for sales, marketing department is responsible for marketing, and CRM or customer relationship management module or department responsible for managing the customers only. So those departments at the end, whatever the financial, as they are interlinked to each other, whatever the financial activities are going on, it will be gone through finance only. No one department will have control over all those financial activities except finance. So in this way, they will prevent the fraud because the invoicing part and the payment part will be done from the finance thing only, because they'll be receiving the payments from the different vendors and they'll be recording under them, and they'll be recording the expenses occurred by the company, and they'll be paying the expenses, and they will be managing all the cash flow activities. So there are no chances of any fraud. It will be like minimized to some extent or maximum extent. Now at the end, all these transactions are recorded, like payments are recorded, expenses are recorded, incomes are recorded, salaries are paid to the employees, banks are managed properly, everything is managed. Tax preparation and filing goes on. Now in the tax preparation, as we have paid tax to vendors and we have collected tax from clients, so now the system will generate automatically a tax filing report, which will be input minus output. So at the end, a report is generated based on which the tax will be filed and paid to the government. These need not be done manually by the finance department. This will be taken care entirely by the ERP. Now at the end, obviously every company is working for the reporting purpose to see what is the overall rate of the business. So those are nothing but comes on the financial statements or financial reportings. What are those statements or reportings? It's nothing but income statement report or P&L, profit and loss statement report, trial balance report or balance sheet report or ledger balances report. These reports will show you the worth of the business, how is it, whether the business is in profit or not, whether it is worth to carry out the operations in a sufficient way or not, or they can take care of where their expenses are being incurred more or where the income are being generated less, and they can take the decision to control their activities in a particular department and an organization. This is the way how the finance will usually carry out its operations using the ERP. Thank you.